they're putting the foot down on the accelerator, but also braking, which makes no sense whatsoever. They're going to have to choose to stop one or the other. And my feeling is, looking at the bond market as well, that they're going to have to stop QT, and they might wait a little bit to announce a new massive amount of QE. And why do I say that? Well, because we're seeing bond yields go back up. Wednesday, October 9th, 2024, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at why you need to hold on to your gold and silver for dear life. Yes, I've spoken about this several times in the past, so this will be like a part 6 video on the topic, and we're going to integrate the fact that China continues to get rid of U.S. treasuries to buy physical gold. Yes, there were news earlier this year that they stopped buying gold officially, but I think that's just a distraction, a way to keep the spotlight away from the fact that the Chinese need to get as much gold as possible and at the lowest price they can get it. And they're not being too successful because the price continues to rise. Before I start though, yes, you probably noticed I haven't posted that many videos in the last week, and I usually post a video every day. So why was that? Well, many of you probably know that I was away for a week. My wife and I went to Rome for a week, and it was my birthday on October 3rd. So yeah, we had a very good time there. I did make a couple of videos and a shorter video, which I'll put up in the cards here, of when I went up the steps to the Capitoline Hill in Rome. And that's where they had the temple of Juno Moneta. And that's where apparently they minted the Roman coins, the denarius and the arius and all the other Roman gold and silver coins. So we're back. We got back last night. Rudy's doing really well. He was happy to see us. We've been out already this morning with Rudy. And before we go on to the main topic, just wanted to thank Graham from the Shires for sending me these really nice coins I'd never seen before. They're 1 ounce silver coins, and it's got the owl of Athena, the owl of Athens there. And it's from a place I'd never heard of before as well. It's a place in the South Pacific Ocean called New, and it's $2, and it's from 2017. It's 1 ounce of silver. So I got here last night, and the package was waiting for me. So got 3 of them. So these coins are from Niue, N-I-U-E. It's self-governing island country in free association with New Zealand in the South Pacific Ocean. Is part of Polynesia and predominantly inhabited by Polynesians. And yes, it has a monarch. It used to be Queen Elizabeth, and now is King Charles, and that's why they're on the coins. But thank you very much, Graham. I really appreciate it. You didn't have to. Anyway, what I'm going to show you here first is a chart of gold. I could have put a chart of silver as well, but I think gold is a good proxy for these videos that I made. And the first one I made was, let's see here, the date, April 13th, 2018. So I've been warning people because I've been in this game, and what's the game? Well, it's trying to save some of your hard-earned fiat currency savings. And transform it or exchange it into real money, gold. And why is it hard? Well, because it's hard to save in the first place this day and age with cost of living rising. Yes, there are things that are going down in price, but all the basic necessities of life, shelter, food, transport, taxation, it's not a basic necessity, but unfortunately something we have to pay a lot of times. Utilities, heating, these are all going up. And why are they going up? Well, because of the inflation of the currency. It's very easy for the central bank and the treasuries of the world to stimulate the economy with more debt and more funny money, but it's harder for the real private economy to keep up with that inflation. And why is that? Well, because we're being taxed more and more. We're being regulated in order to destroy the mom and pop businesses, in order to bring in this globalist agenda where the big corporations run everything, so that mom and pop can't own anything, right, by 2030. So it gets harder and harder to hold on to gold. The other reason it gets harder to hold on to gold and silver is that ever since the 70s, the policy of the US Treasury and the UK Treasury as well, and the central banks, is to turn gold and silver, into a speculative commodity instrument where you get a lot of whipsaw in the price. And that discourages the general public from holding gold and silver, because they're always deterred from doing it. They think it's the riskiest place to be, even though it's the safest. If you've been following my channel. So you can see here, part 1 was in 2018. And at that time, gold was around $13.50. And I said the same thing back then, that you need to hold on to your gold and silver, of course, for dear life, because the higher gold goes in nominal terms, the more volatile they're going to make it. And I made another one. Let's see, part 2, that was a couple of years later, almost a couple of years later, in February 2020, just before we had, of course, the 2020 crisis. And you can see here how it got really volatile. We jumped up to 1700, went down to 1450, but then it picked up again. And throughout 2021 and 2022, beginning of 2022, I've been warning people to hold on to gold and silver for dear life. Yes, we had a drop here towards the end of 2022 to just above 1600. It was a false breakout on the downside. And hopefully a lot of you who've been following me did not get rid of your gold and silver then. And again, gold and silver is like savings, unless you need to turn it into the national fiat currency. You should hold on to it for as long as possible, because there's no other way for the central banks and the governments of the world to keep this debt load going. And I think we're very close to seeing the Fed, Bank of England, and even the ECB start QE again, even though they're actually doing QT, which is tightening, quantitative tightening. They are selling bonds from their balance sheets, and that doesn't make any sense, because they're already starting to cut their base rates or their short-term rates. So it's like they're accelerating. They're putting the foot down on the accelerator, but also braking, which makes no sense whatsoever. They're going to have to choose to stop one or the other. And my feeling is, looking at the bond market as well, that they're going to have to stop QT, and they might wait a little bit to announce a new massive amount of QE. And why do I say that? Well, because we're seeing bond yields go back up, not just in the US. We've seen the 10-year yield go back above 4% after hitting 3.6. We're seeing, I think, mortgage rates in the US. They've just gotten up to 6.6. And in the UK as well, not only have rates gone up as well, there's a lot of uncertainty in terms of the budget that's going to be announced on October 30th. There's fear as well in the UK that the government is going to fudge the debt numbers to make it look smaller so they can borrow more. And I don't think the bond markets are going to buy into that. So they're going to have to find some kind of crisis here to justify a lot of QE, or they might just have to do QE. And when that happens, you want to have gold too. I mean, QE is the ultimate money printing exercise. And I mean, gold has been going up quite well this year, as you can see, from 2,000 to 2,600. And with QT. So can you imagine when they start QE? And I think they will. And the other reason I think they're going to start QE, and I spoke about this earlier in this video, is China. And I follow at King Kong 9888 on Twitter or X. Eric Jung is his name. He's a Hong Kong investor, and you might think, well, Hong Kong is China, but it's not really. It's a autonomous region of China, semi-autonomous. And he's a precious metals investor. He's very knowledgeable about the markets. And he posted yesterday this. My wife was at the Zhuhai China Marriott SPA today, and she started chatting with the spa therapist. The therapist told her for months, it has been all over Chinese television, that the Chinese government has been selling US treasuries and replacing it with physical gold. So there you go. We don't hear much about that in the Western media. We don't hear much about that even in the alternative media in channels like mine. But it's good to follow Eric. And you can see that in Hong Kong, they don't talk about that. They haven't talked about that. It's in China, on Chinese television. So I thought that was really interesting. I think back in May and June, the People's Bank of China stopped publishing, or they didn't increase their gold holdings in the data that comes out for the World Gold Council. So the thinking, especially from mainstream financial press, was, well, the Chinese have stopped buying gold. But I don't think they have. And of course, in the last 12 months or so or more, they've been announcing every month their increase in gold reserves. And that's very unusual because in the past, they would keep their reserves at the same level for years before announcing changes. And it's not just the PBOC that buys gold for the Chinese government. It's also some of the I think the People's Liberation Army has a lot of gold, from what I hear. I think it was Simon Hunt who came on the channel a couple of weeks ago. He told me that they have a lot of gold, and all the other state-owned institutions and banks as well. So when I was in Rome, I kept an eye on things, and I saw that yesterday gold and silver got hit pretty hard. But as I've said, you have to try to hold on to your gold and silver for dear life. And why that kind of comment? Well, because I've been doing it, as I've said, for a long time, since 2002. And I've known since then, right off the bat, that there's something funny about the gold market with the bullion banks, making it speculative, getting a lot of volatility in the futures and putting people off. And I was discouraged a lot in the beginning, but I've become kind of immune right now. So I'm glad I haven't gotten rid of my gold. And I'm not surprised we are at 2,615 now. And when I started buying, it was just above $300. It was just above 200 pounds, and now we're around 2,000 pounds. So what I'm trying to say is, yeah, you need to think when you get these shakeouts, and this isn't really a big shakeout here in gold and silver, in my opinion. But if you get discouraged, or what you need to think about is, number one for me, when you get rid of your gold and you go into the national currency of your government, you have to realize that you're financing them. So if you're unhappy with what your government is doing, you have an incentive not to do that. So that's the first thing. Second thing is that if you put your savings back into the bank, into the national currency on deposit, you're lending your money unsecured to the bank. And if that bank gets in trouble, your money could be gone. Third, you put your gold and silver back into the fiat currency, and we know that the debt is becoming more and more unsustainable. I mean, the US is running $2 trillion plus annual deficits. The national debt is going through the roof. Same thing has happened in the UK. So you put your currency or your savings back into the fiat currency, it's going to be debased more and more. And the other reason why, if you look since the year 2000, gold has returned about 9 to 10% per annum in the major currencies, as you can see here from incrementum, and in gold we trust. Yes, it doesn't mean to say that every year it will do that, but over the long term it will. It's a long-term game. And talking about long-term, that's what was interesting about Rome to me. Not only the historic ruins of ancient Rome, but also the more modern, and Italians consider the last 500 years modern. And you look at the art galleries that are from the old patrician Roman families, and they've got stuff there that's 400, 500 years old that is priceless. And what I've learned is that some of them, they can't be sold because of old Roman law, where the people buying that 400, 500 years ago specified that their family heirs can never sell it. So that's why they have to have museums to upkeep the stuff. And so they didn't buy it back in 1600 to sell it a year later to make money. I'm not saying you should think about 400 years, but maybe 4 or 5 years isn't that much when you think about hundreds of years, right? So, and I think most people, when they think about buying gold, we become so short-term oriented. They think about 4 weeks or 4 months, and I think that's the wrong way about it. And even for investments, of course, if you're trading, it's a different story. And I'm not here to talk about too much trading. I could, but I don't think it's the way forward. So there you go. What's going on this morning in the markets? Well, it's 8:22 a.m. I see that gold yesterday got down to almost 2,600, and it closed around 26.21. So it did rebound. This morning is back down a little bit at 26.15. Silver is almost actually virtually unchanged at 30.60. Of course, we need to get back above 31 and then 32. But yeah, it's just patience. That's the other thing you need to learn, yeah, to be in the precious metal space, in the sound money space, is patience. And for the markets, the numbers tomorrow, I think, is what they're waiting for. And it's the CPI number. They call it inflation. You know how I feel about that. It's not really inflation, it's prices. But be as it may, it's expected to drop from 2.5 to 2.3. And I think that will be important for the short term. Longer term, of course, you need to hold on to your gold and silver for dear life. That's the way I see it. You might think differently. But anyway, with that, I'm going to wish you all a very good day. Take care. Bye.